Hey, this is Matt from InvestiQuant. Today is Wednesday, July 7, 2021. This morning we saw the markets sell off pretty hard early on in the session, followed by a strong rally right back up to the highs here in the S&P, which is this top left chart. We've got some strong bounces in the other instruments as well, but not quite as strong as the S&P, which actually made new highs this afternoon following that sell-off this morning. And we are awaiting the FOMC minutes, which are coming out here in about 15 minutes or so from the time of this recording. So what we're going to be looking at this afternoon is what has happened historically when it is the day of the FOMC minutes, and at 2:30 p.m. Eastern Time, you are trading above the open, and the gap direction for the day was up, like we saw this morning. So let me go ahead and set this up. I've got the 2:30 time entry selected here. The exit is set to 4:15 p.m. Eastern Time. This morning we gapped up. I'm going to add that piece of information here from the opening filters, gap direction, gap up. So I've added that to the test. Next, I'm going to go into the post-open filters, and specifically we'll be looking at when you are trading above the opening print at the time of entry, which I've got set to 2:30. So I'm going to go ahead and hit equals next to close above the open. That's going to mean the 2:30 price is above the 9:30 a.m. price. And then next, I'm going to put it in a similar market environment. We're above a 10. We're above a 200-day simple moving average. And lastly, in the market events section, I'm going to say that today is the day of the FOMC minutes. So I'm going to grab the active today section, FOMC minutes. Those come out at 2 p.m. Eastern Time. By the time you're watching this, they are probably out, and we'll find out at that time or shortly after if we're trading above the open or not. But that's the way I've got it coded up here. And now I can click View Results. And here we go. These are the results based upon entering the market long at 2:30 p.m. Eastern Time, when it is the day of the FOMC minutes, and at 2:30 you are trading above the opening print, and today's opening print is above the prior session closing print. This is taking place in a bull market environment, which I've defined as above a 10 and above a 200-day simple moving average. So this has not happened all that often historically. We've just got 19 samples to look at in the S&P, 22 in the NASDAQ, 15 in the Dow, and 10 in the Russell. And the win rates on these are a little bit favored here on the handful of samples that we do have. The win rates for the S&P coming in at 63%, whereas the NASDAQ and the Dow are pretty neutral, around 55 and 53% for those two. The Russell, the strongest of the group, coming in at 70%, but it's also the smallest sample size at just 10 samples there. So collectively as a group, they are a little bit favored there on the win percent. However, if you look at the average win and average loss on these, you will see that the average loss is larger in all four instruments than the average win. So if you actually look at the net profit on these, the net profit's telling you the historical results based upon trading one contract of each of these instruments on all of the samples. So all of the net profits here are negative. But the win rates on them are all at least mildly favored, some quite a bit favored, but they have lost money historically. That's because these average losing sizes here are significantly larger than the average winning size. So historically speaking, this pattern has favored moves higher into the close more often than not, but when it doesn't happen, the moves have been larger on average to the downside. So hopefully you found that helpful. Good luck today, and we will see you next time.